Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show. Today, we are talking the silver market and whether it is truly in turmoil with massive shortages hitting the LBMA, the London Bullion Market Association, and New York's COMEX exchange harder than ever. LBMA inventories have cratered 33% this year, sparking emergency airlifts of over 1,000 metric tons from the US and China. Meanwhile, COMEX has seen 29 million ounces vanish in a single month. So is the stage set for a potential delivery meltdown? Here to dissect this crisis is Keith Neumeyer. He's the CEO of First Majestic Silver, a leader in pure play silver mining with boots on the ground insights into supply bottlenecks. Keith's been warning about these vulnerabilities for years. Keith, always good to see you. Welcome back to the show.
It's been a while since we've chatted last, Daniela, so it's so nice to have the time to chat today.
I was going to say you've been too silent through all this euphoria that the silver market has experienced, that we're going to talk about that. But I was really eager to get you on because I just had David Morgan on, as you know, a silver guru, David Morgan, who argued that the immediate panic in the silver market has subsided and the worst of the squeeze appears to be behind us. But he says it was a critical lesson, that there'll be a day of reckoning where the physical market takes control of the paper paradigm. Your thoughts, do you agree with David? Has the panic subsided? And is there potentially more pain to come?
Well, in a market where it's driven by paper prices, we've seen, the paper prices come to the mercy of the physical market. And, we trade somewhere around 2 billion ounces of silver per day between London and Shanghai and Chicago. That's a lot of silver in one day to trade, considering the miners only produce, around 850 million ounces a year. So, that's pretty crazy leverage. So, all of a sudden, the paper market gets untwinged or whatever, however you want to say it. All of a sudden, they have to get the metal because they need some metal to back up all their paper contracts. And it's not the only time we've seen it. We've seen it in the nickel market previously. We've seen it in other markets as well. And we saw it in the silver market. We saw it in the silver market in 2011. I remember when, that whole move from, low 40s to almost 50, that was all short covering. We didn't see a huge short cover this time around. It was more physically driven this time around, which is interesting. I think that tells you that there's a huge physical shortage in the market, but that shows up in all the stats. We already know that the silver has been in deficit for 5 years now. So, you just can't continually run in a deficit in the physical market and not have it show up in the paper market. And that's what we're seeing.
I'm glad you mentioned that. I mean, do you have any numbers offhand of how big that shortage is, Keith?
Well, the numbers, if you go back 5 years, the numbers we all use are the Silver Institute numbers, and whether they're how accurate they are, people can have their own opinions on that. But the number fluctuates between 150 and 250 million ounces a year of physical shortages, and that's been going on consistently for the last 5 years, as I said. Doesn't look like this year's any different. Doesn't look like next year's going to be any different. Like, where's the silver going to come from? As a human race, if we're going to be consuming 1.2 to 1.4 billion ounces of silver in industry, well, that's including investment as well, including ETFs. But how can the miners ever fill that deficit? It's just not going to happen in this current price environment.
Do you think that, okay, this time we managed to I guess, escape, but do you agree with David Morgan that that day of reckoning will come where we just can't match up the numbers?
Well, when you say escape, it's silver is a bit of a clunky metal, so it's hard to move around. And there was a lot of metal, gold, and silver moved to the United States as a result of the tariff issues. And I guess in hindsight, maybe some of that metal shouldn't have moved, but in fact, it had to move back. So, the London market is really where all the price fixing occurs, and it's a market that needs that metal, and it was obviously very stressed, and they needed the metal back. And I saw some stats just, I think, yesterday that India was a huge consumer of silver. this past month. And we know China is now, I just saw this morning actually, that China is stopping silver deliveries outside of the country. And so, we need this metal. And that's why I'm a triple digit
Yeah.
silver guy. I came
Well,
up with that phrase back in
you did.
2011, 2012. I was the first to say it. I was criticized for almost 15 years for coming up with that phrase. I was wrong because silver went down to $12, but I didn't put a timeline on it. I will, my timeline is out in the future because I'm a long-term investor. I don't care about these daily fluctuations. It's irrelevant to me. I look at the big picture, the supply demand fundamentals of this metal. If we're going to electrify the planet the way we want to electrify the planet, and governments are going this direction, nuclear power plants are being built all over the world now, which are huge consumers of silver, rebuilding electrical grids or building brand new electrical grids, in places that don't have availability for electricity. Every time you move electricity around the world, you need silver. And I think that, where was the light that really changed the market? I think when the United States put silver on the critical minerals list, I think that was a pretty important signal to the market and to the big institutions. I've come up with phrases over the last 20 years of my career, calling silver a strategic metal. There's no substitute for metal, or silver. I've come up with these different phrases, but for the United States government to all of a sudden say silver is critical, and that I think really changed the market a lot.
We'll get right back to the interview, but this is an important moment to ask yourself, when the next crisis hits, will you be properly positioned or wish you prepared earlier? I've spent over 2 decades reporting on global economic shifts, and what's happening now is unprecedented. In moments like this, timely decisions are critical. That's why we've put together the Private Wealth Playbook. It's a free guide showing you how to use gold and silver strategically for protection, privacy, and long-term performance. Click below or visit DannyReport.com to download it now so you can move forward with clarity and confidence. Now back to the show. You brought up China, a super important point, and let's talk about their sudden tax and import rule changes on gold and silver. How much of an impact will this have, Keith?
Well, who knows, right? But it's just going to create further tightnesses in the market. China's a big producer of silver, and they're also a huge consumer of silver. So they're a very, very important player in the whole scheme of things. They produce a ton of electric cars. They produce a lot of cell phones. They produce a lot of computers. They're refrigerators, freezers, household appliances. You name it. They're just a huge engine and a huge consumer of silver. So they see it as an issue, and that's why I think they've now come out with that announcement that they're going to stop exports.
Right. That makes a lot of sense. The silver squeeze is becoming, at least from what I understand, a major problem now in China.
Mm-hmm.
Keith. So let's talk about price action, because you've been silent, and I'm thrilled that you're giving me the first interview here. The price hives also, obviously we were on that road to $50 and we've come down. But look, silver price has done fantastic, right? Your thoughts, what were you thinking during that run up?
I was a little surprised it happened so quickly, and it did make me nervous. I don't think parabolic moves are in anything, whether it's a stock or whether it's a commodity. It doesn't really matter. Every kind of major move like that, it tells you there's something changing in the market for sure. I think it's signaling something about the future. But it did get a little bit ahead of itself, and I was, questioning, where is the top going to be? And I listened to all the same people you probably listen to, and people calling for $60, $70 and so on and so forth, but no one has a crystal ball. But it had to stop, and it did stop, and then it hit close to $55, which is kind of nice to see. And our stock was doing well. The whole mining sector was doing well. Gold's 4,400, almost 4,500. So the whole mining sector lit up and put a lot of smile on a lot of people's faces, like myself, who've been in this bear market since 2012, 2011, 2012. We had a bit of a blip in 2016 and another blip in 2020, but those are short-term blips. But I think things are changing now. You've got, the central banks buying gold now, and they weren't there 10 years ago. You now got the market waking up to the industrial needs for silver. So there's now a whole set of new buyers coming into the precious metals market, which didn't exist in the last bull market. And I think that what we've seen in the last 2 months is a signal of the future.
Keith, obviously, when the price is consolidated, people were talking silver's been, or they have smacked down silver and gold again.
Hmm.
And I brought this up to Morgan also in the interview, and he said something interesting on the topic of manipulation, which I know we've spoken about in the past. But he said, look, the long-term trend, he was talking silver, can't be manipulated. But within that trend, yes, you can play games. Yes, you can manage the price. But long-term, he says, you can't manipulate the prices. Do you agree with that statement?
Yeah, you're going to get big investors offside. Whether they're long or short, anything. Doesn't matter if it's a stock. It doesn't matter if it's commodity, as I said earlier. These big hedge funds, big banks that have positions that might be offside, they're going to try to protect their book as much as possible, and they don't like losing money. So at $55 silver, 3,450 gold, I think that took a lot of people by surprise, and I think there was a lot of traders, a lot of big funds out there that were just offside, and they had to have a correction. So they wait for the right timing, and look, buying does get exhausted at some point. In a bull market, people just get tired, and then the buying ends, and that's what we've seen happen. It ended, and now the market needs to consolidate. And usually when you see a parabolic move like that, to see a 15 to 20% correction is normal. We hope to see that. I think we're about 15% already as of today. Today's a great day for an interview. I see my screen is covered in red, which is unfortunate. I love talking on a green day, but
Yep.
nevertheless, we're down about 15%, and who knows where the bottom is, but it's going to
Right.
settle. It'll find a level wherever that level is, and then it'll sit there for 2-3 months, and I think the bull market will resume.
We're speaking, I know ahead of your Q3 earnings results. First thoughts, I mean, I know you can't divulge right now, but just direction for First Majestic for the remainder of the year here.
Well, cash flows are great. Having these, despite the fact that we've seen, silver come down a little bit, these prices are great for us. They're great for the entire mining sector. It's very encouraging to see all the juniors getting financed, because that's where we look at M&A transactions, on a regular basis. And, if the juniors aren't getting financed, then there's nothing for us to buy, because, they need, a good 3 to 5 years of positive drill results before we wake up and say, hey, look, there could be 100 million ounces of silver sitting there that we should be looking at potentially,
Right.
buying, right? So, but we have to give the junior sector time to develop their projects, and that's really encouraging for the long-term health of the
Yep.
mining sector. For First Majestic, I don't want to say too much because our financials are coming out, I think, tomorrow. And but I can tell you, Q3 was just a fantastic quarter, and we're looking to end the year off on a very positive note.
Yeah, I think that's a key point. To have that healthy ecosystem, you need a healthy junior mining sector. Keith, just comments on Kerr acquiring a New Gold. That's the largest gold sector deal of 2025.
Mm-hmm.
Any thoughts on that M&A activity here?
I was a little bit surprised. I know them fairly well. I guess they're following the Pan American strategy where they want to become a gold company, which is their decision, I suppose. I think I was looking at some numbers yesterday. I think they're going to drop to below 30% of their total revenues. I think the number's closer to 25% revenues from silver. We're at, I think, 55 or a little bit higher than that on silver. And when, compares to Heckler or Coeur or Pan American, we're the purest of the big guys. And I think that from my perspective, that's very, very important, for Coeur, to buy a couple more gold mines in Canada. safe jurisdiction. It's obviously a very important transaction, and you saw a couple of other stocks pick up, in the sector as a result of that. Maybe that'll get some of the majors off their chairs, and maybe they'll do some other transactions because I think we need that. I think we need more consolidation in the mining sector, and I think it's good all around for the industry.
Keith Neumeyer, thank you so much. Before I let you go, just final thoughts to all your legions of silver fans watching, investors watching. Anything you'd want them to know that will better their lives or make them more knowledgeable about what's going on behind the scene in gold and silver?
You have to play the long game. And there's traders out there. There's lots of good traders out there. Christopher Million from the technical traders, or Garrett Soloway from
Soloway.
Verified Investing. These
Yep.
guys trade the market, right? And if people are looking for advice on how to trade these dips and valleys in whatever they want to trade, those are two very good sources. But that's not how I invest. I play the long game. I think we're going to see $5,000 on gold and $100 silver. So why would I, be trading this market? I'll stay long the companies I like, and First Majestic obviously is, my largest position. And I'm there. I put the company together 22 years ago, and it's been up and down. That 22 years, there's been some good times and some challenging times. And, hopefully we're in another 10-year bull market. I think we are. It's too early to really determine that. You never really know your bull market until it's really over, quite frankly. But, when we started the last bull market in 2012, it went to, 10 years. And silver went up 10 times and gold went up 8 times. Now, if you look at a similar type of move that, let's call it started 18 or, 2 months or 2 years ago, we're early days. And, you just pick good companies, good management teams, and then just, stay in it and then don't get shaken out, when you see moves like we're seeing over the last week or so. And unless you want to trade the market. If you're going to trade the market, don't talk to me because there's other people out there that could tell you how to trade the market. But I go after management teams, and I play the long game.
Wise words. Ups and downs, just like life, Keith. I know you squeezed us in today, and I appreciate your time. I know you got 5 hours of meetings ahead of you. Thank you, Keith Neumeyer, and we'll be watching for the financials. We'll see you soon.
Great. Well, good seeing you again.
And thank you all for watching. More great content coming your way. Be sure to subscribe to our channel. We'll see you soon.